Everybody, welcome to exercise 12-16 as well as 12-17. So accounting for research and development costs, Price Company from time to time embarks on a research program. When a special project seems to offer possibilities in 2019, the company expends $325,000 on a research project. But by the end of 2019, it is impossible to determine whether any benefit will be derived from it. What account should be charged for the $325,000 and how should it be shown in the financial statements? It's going to be shown as a research and development expense. That is what it is. We looked at Intel a little bit earlier on one of the questions, and I think we could actually still see it right up here. If the amount of R&D is significant and if that's something that you want to be showing to your investors, I would strongly recommend putting it up here. So it should show to R&D. So the project is completed in 2020 and a successful patent is obtained. The R&D costs to complete the project are $110,000. The administrative and legal expenses incurred in obtaining the patent in total are $16,000. The patent has an expected useful life of 5 years. Record these costs in journal entry form and record patent amortization in 2020. So the cost to complete the project are $110,000. So that's still going to be research and development expense. And this is going to be over here at $110,000. And we would just be crediting here AP, cash, etc. This would be for 110. Now, in terms of when we're spending money to obtain the patent, right? So the administrative and legal expenses in obtaining the patent, that cost we will capitalize. And so here, this will be a debit for 16,000 here. When it comes to the estimated useful life, it would basically, we would say 16,000 divided by 5. So our amortization expense is going to be $3,200 for the year. Or patent. So you can use either one. I'm fine with it. So that's letter B. Continuing on over here. In 2021, the company successfully defends the patent in extended litigation at a cost of $47,200. That sounds way too cheap, thereby extending the patent life to December 31st, 2028. What is the proper way to account for this cost? Also record patent amortization. So what we're going to do is we're going to go ahead and debit patent again. And we're going to debit patent for the cost that we had to pay to defend it. And those costs can be capitalized. Okay. Now, what's different about this, though, is that when I'm looking over here, and of course, I'd have a date and a description, but I'm being, Anyways, so what did my patent look like? Well, the original cost, or what I paid in the original legal fees, was 16 grand. I took amortization in 2020 of 3,200. Then I'm adding on in 2021, I'm adding on over here 47,200. So over here, my amortizable amount is going to be $60,000. Or my patent base is going to be 60,000. Now, what I need to do now is I need to amortize this, and it's now saying that it will give us, extends the patent life to December 31st, 2028. So if I'm in 2021, 2022, so this is 1, 2, 3, 4, 5, 6, 7, 8. So my amortization expense is going to be for 2021 is going to be my base cost here of 60,000, which is now my current carrying value. And I'm going to be dividing this by 8, which is the number of the expected useful life of the patent. Or over here, that's how I would go through and do it. In terms of recording this, it would just be the same. I would just be going over here, amortization expense, accumulated amortization. This would be 2021. This is going to be 2020. And so this here would just be the 7,500. Okay. So let's take a look over here. Additional engineering and consulting costs incurred in 2021 to advance the design of a product to the manufacturing stage totaled 60,000. These costs enhance the design of the product considerably. Discuss the proper accounting treatment for this cost. So it's basically what the book says is that it's additional engineering and consulting costs required to advance the design of a product to the manufacturing stage are still going to be R&D costs. As indicated in the chapter, it is R&D because it translates knowledge into a plan or a design for a new product. So again, I think we're still going here and we're still saying that it's still going to be R&D costs. So that's question 12, exercise 12-16. Let's now go to take a look at exercise 12-17. So Moore Company incurred the following costs during the current year in connection with its research and development activities. Cost of equipment acquired that will have alternative uses in further R&D projects over the next 5 years. Use a straight line depreciation. So over here, let's go to the next one. So compute the amount to be reported as R&D on a current year income statement. So with this one here is that it's equipment, but what we're going to do is because that equipment's being used for R&D, we're going to record the depreciation expense as part of the, basically over here, if we're using straight line of 56,000. So depreciation expense, basically for the R&D equipment. Hopefully you learn how to spell equipment correctly. It's going to be about 56,000. Okay, so that's the first part. Materials consumed in R&D, 59,000. And again, we're trying to basically total R&D on the income statement. Okay. So I've got materials consumed, consulting fees paid to outsiders for projects. Sure. The key here is that if it relates to R&D, we want to record it as R&D, research and development expense. Again, it's something that's very important for our investors to know. Personnel costs, those will also be this would also be classified as R&D costs. Again, if you look at Intel, for example. Indirect costs, reasonably allocable to R&D. We'll go ahead and put this here of 50,000. And again, that could be like factory overhead. It could be different like factory space if we're saying that some of that relates to research and development. Now, materials purchased for future R&D projects, this would just be inventory. And it would just be, we could call it, actually, I wouldn't say it would be inventory. I would probably call it supplies. And the reason why I wouldn't call it inventory is we're not holding it for resale. Rather, those materials for future R&D projects are really to help us with future R&D, but we haven't used them yet. So we're not going to record it as research and development expense until they're actually used. So the total amount here in terms of our research and development expense is going to be 393,000. And there you go. That is exercise 12-17. Thank you so much for joining me here today. And wherever you are, have a pleasant evening, and I will see you on the next video. Have a great one.